Hello and welcome to LAT's Weekly Market Insights. The week got off to a fast pace with an injection of stimulus as Pfizer announced their 90% hit rate for their vaccine. Whilst the initial response was positive, the mood was soon dampened as the realities of implementation and timelines came back into question. The market reactions across the board were dramatic. We're going to bring into focus International Airlines Group and Zoom, which have had two very different paths during the pandemic. The aviation sector took the brunt, of course, but has finally been given a lifeline for something for it to cling on to. International airline groups, which is one of the largest airline groups with 598 aircraft flying to 279 destinations, couldn't get its head above water for months now since the pandemic took hold. We can see the latest move there, which was a break of this counter trend line here on the 4-hour chart, rejecting off this key resistance zone, which we can see coming in at that 220 round number. We sold off, broke that level, impulsively gaps lower before ultimately finding support just below that 100 big psychological handle. And then the technicals took over. The Pfizer announcement came in. As always, that big question, was this market due a correction anyway? We'd found strong support of that 90 handle, bullish divergence coming in from our relative strength index here, and a really super clean break of this 4-touch trend line and effectively the neckline of this double, almost triple bottom pattern formation. From there, it was a straight shot back up to the high where we opened after that gap lower. And now finding a little bit of consolidation and a pause in between the next resistance level, the current support, and of course we have that 50% retracement lingering up at that 160 handle where previous support can be found. Now certainly IAG not out of the woods here, but it has been a positive step in the right direction for the aviation sector. We've also seen companies such as EasyJet taking a huge boost off the back of this data. On the flip side to this, of course, we have the video conferencing service company Zoom. This had flourished during lockdown as more and more companies adopted this work from home principle. But that positive news on vaccine and of course that ever increasing possibility that perhaps we return back to somewhat normality soon saw a dramatic move for Zoom. But again, this was very technically driven. We'd started into this downtrend of lower highs, lower lows. We found ourselves pre-announcement back up into this 61% Fibonacci retracement and threatening to get up to give that third touch of this trend line. This trend line at the moment purely tentative as a 2 touches are not yet confirmed. But this key resistance zone coming in at this 50,000 region, acting as strong resistance. Now, trading on the US markets, this market was closed as the Pfizer announcement came out during the European session, but you can see this aggressive gap lower, gapping over the previous low, retracing back up to that previous support before continuing lower. We now find ourselves back at coming back up towards this resistance level. And the key for this now will be, what is the next step for this vaccine? We are poised at a Fibonacci level again. If we come back from the high to the low, we find ourselves back up at that 50% retracement. All eyes now, can Zoom continue this downward pressure, or are the realities going to sort of tamper its progress? And actually we might see some positivity come back into Zoom, but a fascinating chart driven by fundamental and technical moves. Now, the risk on mood could be seen evidently in the commodity sector also, as gold sold off in line with the other safe haven assets, and it was a monster move in gold. Come across here to the 4-hour chart, but again, it is technically driven. This aggressive 8-hour period, 1 day's worth of selling pressure through that European start of the American session, aggressive selling here as people moved out of those safe haven assets and then into that more risk on tone. But again, it is a technical move. Key strong resistance coming in here at this high before eventually we broke lower, and yes, a fundamental move, but we broke down through support with a little hesitation. We can see that hit there before the clean break and ultimately making its way back down to the lows from Thursday, the 24th of September. So again, yes, fundamental, but the technicals were there to help give us a roadmap and see how far is this market going to move lower. And through the rest of the week, like many of the assets out there, it's gone into a consolidation and it's just taken a breather after such a substantial move. Now, the commodity currencies have an exciting week also, packed with trading opportunities. That initial boost from Pfizer saw Kiwi yen aggressively move higher, breaking key resistance. If we come across to that chart now, Kiwi yen, keep ourselves in this 4 hour. This was that initial break, major resistance level coming in at that 7050 region. We broke through that level. Now, hindsight makes this look like a very simple trade. But what's really important to consider is how could we have prevented ourselves from being caught out and been short off of this resistance? And it always comes down to confirmation. If we come down into that hourly time frame, we can see the trend line that was forming on its way up towards this resistance. Now, opportunities to bounce trade off this resistance would have been fatal. Therefore, again, confirmation is king, looking for breaks back through potential support levels. We even got this small little retest here. Previous resistance becomes support before we broke higher. So waiting on that market confirmation, waiting for signals to go short, a break of that trend line. Wouldn't have seen a short here in Kiwi yen until a break of this trend line and perhaps this support level that we can see running through the market here. Now, once we had that initial move, we saw, again, excellent technicals. I come back out to that 4 hour chart and we can see the very next set of highs were immediately tested. If I place that resistance level in here, the highs back here from the 2nd of September, perfectly respected, a little pause, a little consolidation before we went again. And further trading opportunities came to the market. It was, of course, the RBNZ rate decision Wednesday night, and they took a slightly less dovish tone than normal. Negative rates becoming less likely as less stimulus now required than was previously thought in August. Now, as we speak, the progress has been kind of wavering. We've seen the S&P 500 here on this daily chart pop its head to all-time highs on that Monday, but immediately failing and giving us a more sort of bearish tone here. Now, certainly the sell-off hasn't kicked in yet, but we need to see a close above those all-time highs in order for this market to get a real golden ticket to continue to move higher. And this dampening of the mood and a slight kind of risk off tone has been seen again in those risk currencies. Aussie yen providing a fantastic trading opportunity. We came up here on the 30-minute chart and found this key resistance level. Now, if I reintroduce that RSI indicator, again, we see bearish divergence coming into the market from that overbought region, creeping its way up here to 89%, but posting a lower high back down below that 70% mark. Now, execution on this Aussie yen trade, should that double top come into play, was a potential earlier entry through the break of this lovely trend line that we can see up through here. Okay, multiple touches, 4 failures of that trend line before ultimately a key support level here on this 15-minute chart of these lows being broken, opening up the possibility for this market to move back down towards the neckline of that 30-minute double top, which has now been broken and retested as we speak. So the longer term corrective move, that 30-minute double top pattern in play here, alternatively that shorter term trade done and dusted. So an excellent week this week for those commodity currencies, those risk currencies, fighting and jostling for positive stimulus from fundamental COVID-related reasons, then a boost from central bank policy, and then now ultimately seeing a corrective move back the other way off the back of that more dampened, tempered mood around the actual prospects and the reality of the vaccine. Now, it wouldn't be weekly market insights without discussing President Trump. Now, the US has barred allowing Chinese owning Chinese military-linked shares. Now, Donald Trump has signed an executive order prohibiting US investors from holding shares in companies linked to China's military, as the US president's assertive stance towards Beijing continues despite his election loss. And we saw that sell-off come in. If we come across now to the China 50, the risk that brought to the market, if we quickly glance to this chart, we can see the downtrend that was established, a succession of lower highs and lower lows before ultimately that fundamental again driving this market lower. Now, as we've seen in all of these charts today, amazing moves, fundamental drivers behind them, But we must not ignore those technicals. The writing was on the wall here. This was already in a clear established downtrend, and all we are looking at here from this fundamental news is a break of that previous lower low to take this market lower. An excellent week for trading. Let's have a look and see what we've got coming up next week. We'll look to kick things off early doors, 2 a.m. Monday morning, retail sales out of China. They'll kick the week off, big high impact data, before we have a fairly subdued week through the rest of the week. Now, I hope you managed to capitalize on some of these fantastic market moves. If not, please enjoy, have a really good weekend, and we'll be back with you at the same time next week for another weekly market insights.